welcome back to this week's market update. Today is Monday, December 8th, 2025, and we will jump right in. Looking at last week's market performance, stocks extended their recovery as investors grew increasingly hopeful for a rate cut at Wednesday's Federal Reserve meeting. As of this morning, futures markets are pricing in just shy of 90% odds of that 25 basis point rate cut on Wednesday, so pretty strong probabilities that we will get another rate cut this week. As of close on December 5th, we did see the NASDAQ Composite take the lead, up 0.9%, followed by the Dow up 0.5%, and the S&P 500 up 0.3% last week. Moving into our economic data from last week, we did get the ADP November jobs report showing that private employers lost 32,000 jobs during the month. All of the net job losses were concentrated among small businesses. You can see with less than 50 employees, they lost 46,000 and 74,000 jobs respectively in these categories, while medium and large businesses continued to add employees, but overall still a net loss in the month. Here you can see by category, we did see some job losses in professional and business services, as well as information services, manufacturing, construction, financial activities, and other services, while on the other hand, we had some growth in education and health services, leisure and hospitality, natural resources and mining, and trade, transportation, and utility jobs. So overall, a relatively weak month on this data point, with job losses hitting small businesses pretty hard in November. And when you look at the sectors, it tends to be more of those cyclical sectors: professional services, financial activities, manufacturing. Those seem to all take a hit during the month, so not a super positive sign for the labor market there. Initial claims for the week ending November 29th fell to just 191,000, the lowest level in over 3 years, also running pretty contrary to that ADP report we just took a look at. Now, this could be just a temporary blip in the data. It could also be reflecting workers still on severance, unable to apply for unemployment. It may also reflect retirements, reshaping the labor market as more senior employees retire and companies choose not to replace their senior positions. So that would add to job losses, but that wouldn't necessarily create unemployment. Or it could also be a sign that employment conditions are stronger than we think, and that would be great for markets and great for the overall economy. So upcoming reports will be really important, providing more clarity on the factors driving this blip in initial claims. Also last week, we got both the ISM services and manufacturing indexes, with the manufacturing index continuing to be pretty weak and the services being pretty strong. So looking at the manufacturing PMI for November here, came in at 48.2, so a slightly bearish reading for the month. Business activity improved slightly. We also had prices continuing to rise. And then most other categories were bearish for the month. We had weak new orders, weak employment, supplier deliveries fell slightly, the backlog fell slightly, new export orders and import orders were both also weak for the month. So overall, manufacturing continues the trend that it's been in, being pretty weak despite some onshoring policies that have changed in recent months. As I mentioned, the services side of the economy held up much stronger in November according to these indexes, with the November PMI at 52.6%. This was led by higher business activity as well as a slight improvement in employment, a slight contraction in new orders, but it does still remain positive there. And we also saw prices increase at a slower pace than they did in October. So that coincides with some data that we'll take a look at in the next slide, as inflation expectations have fallen slightly in the recent months. Last but not least, we also got consumer sentiment from the University of Michigan last week for the month of December. It showed a 4.5% improvement in the month overall, and this was primarily due to consumer expectations picking up quite a bit in December, but still down 25% from a year ago. As you can see, it's an improvement, but still at relatively low levels. We also saw year-ahead inflation expectations falling to just 4.1%, which is the lowest level since January, and a pretty welcomed sign that price concerns may be easing, similar to how we saw prices fall slightly in the ISM Services Index. While December showed a positive uptick in consumer sentiment, confidence is far from these pre pandemic levels, suggesting households still remain overall pretty cautious. That concludes this week's market update. It was definitely a mixed week of data as we move towards this Federal Reserve meeting, which will be very important in the week ahead. We thank you so much for tuning in, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.